Steve Chappell, who's been with VectorVest for 18 years. It's a long time. It's a long time. And he's got a lot of great information to share. He's actually one of my mentors and a good friend of mine as well. And he's the Director of Trading Systems Development. All right, so he's in the background doing a lot of things, especially for our Jockey Club subscribers. He started off with ENPH.
Yeah.
Steve, I'm gonna let you talk about why you picked it.
Well, I've been picking it all year, Glenn. You know, it's a stock that I don't know if people have ever heard of VectorVest, or from that perspective, then another layer to that would be the Jockey Club. We have a daily chat room where we get in and do a lot of active trading and looking at stocks that are of interest that we can invest money into. And we've been talking about this stock since January, actually. When I look at this stock right now, I think to myself, gee whiz, when we first started really paying attention to it, it was about $7 a share. Now you're kicking $30.45 at this point. But what provides me a lot of peace of mind when I have a product like VectorVest is I can simply look at the facts. And when we look at the earnings per share graphic on the bottom, what you have there is nice rising forecasted EPS. That's a 12-month leading forecasted earnings per share. So every data point you see there is forecasting where earnings per share should be a calendar year in the future. So it's a window into the future. It's not just what earnings are today and how well did they do this quarter compared to a year ago or last quarter. It's giving you an idea of where earnings are headed. And so what gravitates me to this stock still to this day is when you look at what's happening on the right-hand edge of that chart. Earnings is absolutely exploding. And there's a lot to learn about this stock, and when we get into the subject of microinverters and how it plays into solar energy, I think on a 2-minute session, that's probably good for another time. But they're having a huge impact in California. Lots of orders are rolling in. They're removing debt, they're adding revenue, and I think this is a tremendous pick, not only for now, being hot right now as we speak. Look how well it's fared, even as the market has really taken a pretty severe dip over the past several sessions. This stock has shrugged it off very quickly. So I think it has good long-term and short-term prospects, okay? Particularly if this market can hit rally mode here fairly soon. The reason I have Glenn and you might want to reduce the width of that line again. That is a 20 period, you can use either a simple or an exponential. I really don't have a preference. But the way I like to treat this stock and the way I've been treating it all year is, well, there's two perspectives. It looks good from a buy and hold perspective, or if you're more of an active trader, I've had a couple bouts with it this year already from that perspective. So I would either consider buying the new high tomorrow, 12.5 cents above wherever we close today. Or a nice alternative, you can see how reactive it is when it pulls back to the 20. And so I know some of you just don't, for whatever reason, just don't like the idea of buying stocks hitting a new high, so I'm going to give you an alternative. I think with this kind of a position here, you're going to be legging yourself into a good situation no matter which way you go. But you can simply wait for pullback to the 20 MA and good resumption. If you know a little bit about candlestick patterns, that can be very helpful. I can see a couple of haramis and some engulfings and things like that on this chart as it creates those, what they call kisses in the technical analysis community, okay? So you could wait for a kiss, look for good resumption after the kiss, use the buy stop order, whether you do a limit or not, just to make sure that it's rising at execution. I think it's a great play.
Now I want to add to that. If you listen to what Steve just said, he had a lot of information that he already knew about while picking the stock. So you know what that does for you? It gives you a little bit more confidence that the stocks that we're presenting to you, some of us have done a little bit more homework than others. I'm going to tell you that I have not done nearly as much homework as Steve did on his stock. On the two stocks that I went, I looked at their graphs. Steve's stock not only is the epitome of an uptrending stock, but he's got a lot of knowledge behind it. He gave you the knowledge behind it. And you know something that helps to enforce the idea that even though it is at a high, it may not be a bad play as long as you are buying as the stock is continuing to rise. No matter what hot stock you're looking at, having your buy stop or buy stop limit orders in place is going to be key. Just because you see it and it looks good and you say, okay, I'm going to go buy it. And just like Todd said, you go buy the stock and it goes down. If you didn't have a plan in place, that's where you get hurt. But no matter what hot stock you see, make sure that you're buying into it as it is rising. The limit, the buy stop above the high, whether it's 12 cents or on a lower dollar stock, a little lower, make sure you're buying into a rising stock. But I like the information that he had behind why he picked it, and that gives you a little bit more confirmation or confidence that this is definitely a hot stock. All right, if nobody else has anything else, I'm going to go to his next one.
Chat loves it, by the way.
Say again?
Chat loves it.
Chat loves it. Where you go?
Literally, thank you, Steve.
There you go. Thank you, Steve.
You're quite welcome.
It looks good. Gapped up, never broke past the low of the open from that gap up day. Hitting new highs now.
Look at that. Perfect. Gapped up and never challenged that line.
Which is a nice setup.
Nice setup. Jim, you have to say something because the other three did.
Something.
Jim, you don't have to say anything.
No, I'm just echoing what these guys are talking about, and there's a lot of great things to it. And all I could say is when I'm done here today, I'm going to go look into it as a candidate for my retirement portfolio.
There you go. There you go. All right.
It may well turn into that.
It may there you go.
The thing that makes that unique from just any momentum play is that earnings pattern, right?
Yeah.
You got fundamentals driving that price action.
Yeah.
Gives you better long-term
Yeah,
prospects.
they had 2 record quarters, quarter on quarter, here in a row, and they're seeing about 70% growth year on year. Tremendous growth story. There's hardly a hotter growth stock in the market than that one right there.
One thing I will say, it is overvalued quite significantly, though.
Yes, but put value on. So the question was about value. So one of the things that you might find interesting, though, if earnings continues to accelerate at the pace that it's accelerating now, that value is going to catch up to price pretty quick.
Good. I like that. That's good information right there.
Yep.
All right. Anybody else? All right. Let's go to Steve's next stock, which is
A
Kirkland Lake.
very undervalued stock. So Kirkland Lake. Kirkland Lake is, by many people's account these days, kind of the cream of the crop in the gold space. Again, it's another tremendous growth story. They're kicking back about 60% year-on-year growth here as well on the earnings side of things. When you look at the chart, as far as gold is concerned, gold didn't really get hot this year until, we gave the call in June.
Yes.
Right. So this stock actually, if you give me a little bit more time, just do a year here, Glenn. It's had a couple of good runs already. It held together very well even when gold wasn't doing much. So here's a company that even when the underlying asset, gold has just been creamed over the past, how many years now, Todd?
I mean, a good 5 years.
At least a good 5 years.
2012
right?
told just recently.
Yeah, but in spite of all of that, here's the company that's been able to, for the most part, grow the bottom line quarter after quarter after quarter, year after year after year on a forecasted basis. So there's got to be something to be said for how well this company is run. I've seen the guys on CNBC. They seem very well put together, but this is what matters. Not so much what you see on TV and what they're talking about there, but the bottom line, and that's where is earnings going. So here again, I think it's a relatively good pick. You got to keep your eye on gold. There's a strong correlation to the movement, even though they have been one of the stronger players. So if you go up to the top, Glenn, let's go to a performance graph. You guys probably don't look at that. No. Go to stock and just click performance graph right there. It'll plot it against its industry. Okay. And so it clearly it kind of still moves in the same gyrations as the overall space itself, but it tends to outperform. And so if you're going to want to look for a gold stock that's going to keep pace and outperform its peers, I think here again, Kirkland is your logical choice.
Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.